If you guys are fans of this channel, you know that I'm not one to scream that the stock market is rigged. However, something happened today that caught my attention that we definitely need to talk about. You guys may know or may not know that Facebook actually reported earnings today. However, earlier in the day, something popped up on Bloomberg's Newswire that stated what Facebook's Q2 revenue was. Bloomberg flashed a headline that stated that Facebook was expecting between $27 billion and $29 billion for Q2 forecasted. And it was framed as if this was coming straight from Facebook. However, they quickly updated it later saying that it was a correction and they don't know how the mistake happened. Now, I'm gonna tell you how we took advantage of this using a play called a strangle, which I will describe to you towards the end of the video, how we took advantage of these shenanigans. However, Facebook shares sank 6% right after that headline popped up, and Facebook was trading in the low 170s all throughout the day. Now, obviously what happened is that Facebook ended up reporting earnings after market close. Their earnings were actually not that great. If you saw the price action after market, Facebook rose about 18% to trade at around 208 after market hours. This would lead you to believe that Facebook actually blew out earnings. However, they barely beat on earnings per share. They missed on revenue. Revenue did come in at 27.91 billion, just like that Bloomberg Newswire article said. And we're going to get to that in a second, because here's where the rigged piece comes in. Here's where there is a sort of a, not even a loophole, but something that companies know is not going to be investigated by the SEC. And I'm going to talk about this in a second. It's called strategic release timing. And it's something that used to happen way more in the 90s, but still happens till this day. And it goes by unprosecuted. This should be highly illegal, and I'm going to tell you why. Their daily active users came in at 1.96 billion versus 1.95 billion, barely a beat, really. Their monthly active users actually dropped 2.94 billion versus 2.97 billion expected. So as you can see, definitely not enough of a reason for it to rally 18% after hours. However, this is where the shenanigans comes in, and this is how we took advantage of it. There's an old trick on Wall Street, as old as the Wall Street and media relationship, that is called strategic release timing, and it makes sense. This is where companies will actually report something when investors least expect it in order to try to soften the blow sometimes or deceive sometimes. So if companies are looking to bury a bad earnings report or some element of an earnings report that investors will perceive as negative, instead of releasing it at the time they say, they might leak it beforehand. And this is exactly what happens. This is what I tweeted earlier. I said, Facebook revenue guidance was leaked on a Bloomberg Newswire. Shit is not an accident. A multi-billion-dollar company doesn't just print something about another multi-billion-dollar company. It is out of thin air. It is either meant to deceive or soften the blow. This shit should be illegal. And lo and behold, what happened after hours? Because it was already leaked what Facebook's revenue guidance was, and it came in exactly at the range that it was leaked at, that part of the earnings report is now priced in. And since Facebook barely beat on earnings per share and barely beat on daily active users, that was seen as enough to drive investors into hysteria and pump the stock back up, since during the day it had lost so much after that leak. Now imagine that leak didn't happen, right? And imagine Facebook just reported earnings after hours, and it showed that, that weak revenue guidance of 27 billion to 29 billion. Well, the stock could have actually tanked some more. And what's nuts is if you look at the options chain, you will see the volume of calls that were open very late in the day. There was 24,000 calls at the $200 level, 12,000 calls at the 210 level, almost 10,000 calls at the 235 level, 16,000 calls at the 190 level. So you could see that there were some pretty big bets made that Facebook would actually go up, because again, the negative part of their earnings were leaked accidentally somehow, right? Again, multi-billion dollars don't accidentally leak information about other multi-billion-dollar companies without there being some sort of shenanigans involved. Like, think of the process that it would take for that to happen, right? It's not an accident to leak something on the Bloomberg Newswire. However, if there's no paper trail and you can't prove it, right? If things were sort of like made in backroom deals or in-person conversations over lunch or whatever, I'm not insinuating anything. I'm just saying that if there's no paper trail, then, it's going to go by uninvestigated, unprosecuted. So these things can happen and do. So the way that we played it, what we ended up doing is we bought a strangle, the 175 call and the 172.5 put. The way that strangles work is there has to be a big move in either direction. Now, because of this leak and Facebook shares tanking, we kind of suspected that there would be a big move after hours in either direction. Either it would tank some more if, it missed on earnings, it missed on daily active users, etc., and even gave weaker guidance, right? or it would recover and recover tremendously because there was so much selling pressure that now any semblance of good news would cause investors to pile in and FOMO in. And that's exactly what happened after hours. Now, obviously, anything can happen before market open. I'm not saying that this price of 208, 207 is going to remain valid when the market opens. But so far, you could see that this was probably not an accident, and it was something strategic. And we played a strangle in order to try to take advantage of that, right? So when I say that the market is rigged, I say it with sort of not really tongue in cheek, but I say it with a level of trepidation, because I know that especially if you're trading options, you can trade any side of the market. Nobody's stopping you. You could buy strangles, you could buy puts, you could buy calls, you could buy a put and a call in the same way that you do with strangles, right? You could short the market, you can long the market, you can play neutral strategies. So the market is not rigged in the sense that you're prevented from opening certain orders, but that these sort of tricks of the trade, right? Like the strategic release planning, this stuff is going to go, most likely going to go by uninvestigated and unprosecuted. And it is a way for companies to soften the blow or deceive or achieve whatever goal they want to achieve. Anyway, traders, short, sweet video for you. If you want access to all of our trades, all of our options day trades, our analysis, swing trading, our earnings plays, long-term holds, crypto, etc. Link is in the description below. Come be a part of a very vibrant community. Why trade by yourself when you can trade with thousands of other people who are only trying to help each other make money? If you get anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what you think of these shenanigans. Do you think it is rigged? Do you think it is purposeful? Would love to hear from each and every one of you. I try to answer every single question, so leave it down below. Stay safe out there, traders. Peace.